Ladies and gentlemen, good day and welcome to Yasho Industries Limited Q2 and H1 FY25 earnings conference call hosted by Orient Capital. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Masuma Rateria from Orient Capital.
Thank you. Good evening, everyone. Thanks for connecting to Yasho Industries Q2 and H1 FY25 business concall. Today, we have with us from the management Mr. Parag Jhaveri, the Managing Director and CEO, along with Mr. Deepak Kaku, the CFO. Before we proceed with the call, I would like to give a small disclaimer that the call may contain forward-looking statements which are based on the beliefs, opinions, and expectations of the company as on today. A detailed disclaimer has been given in the company's investor presentation. I hope everyone had a chance to go through it, which was uploaded on the stock exchange. Now, I would like to hand over the call to Mr. Parag Jhaveri. Over to you, sir.
Good afternoon, ladies and gentlemen. On behalf of Yasho Industries Limited, I extend a warm welcome to all of you joining us for today's result call. Let me wish you also a happy Deepavali and hope that all of you must have had a good break. We greatly value your time and interest in our company's performance. I trust you have had a chance to review the financial results and investor presentation for Q2 and H1 FY25, which are available on the stock exchange and our company's website. During this quarter, we achieved sales for rupees 167.35 crore, which represent a 17% year-on-year increase. The increase in sales was on account of 16% increase in sales volume. This quarter, due to a favorable product mix, we have achieved an EBITDA of 18.8%. Going forward, we estimate that EBITDA will remain in the range of 17 to 19% for the next few quarters. While operations in Vapi remain stable, the Pakhajan facility is currently operating at a 15% utilization. Several of our products are under various stages of approval, and we estimate that the Pakhajan facility should achieve a 60% utilization rate in Q4/25. This quarter, export contributed about 66% of our sales. The industrial business contributed 82% of sales. Our US subsidiary will be operational in the next few weeks, and we expect that it will help us reach more customers in the US market. Globally, the prices of chemicals have been facing a downward pressure for quite some time, and we estimate that will continue to remain at this level for next 2 quarters. We are also seeing some slowdown across the sector and continue to be cautious in our approach. Despite these challenges, we continue to gain market share. Several of our products from the Pakhajan facilities are under various stages of approval, and we expect the business to develop in the next 3 to 6 months. Despite short-term challenges, we continue to engage with our customers and are confident of our long-term approach. Now we can begin with question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have first question from the line of Aman Thandani from Solidarity Investment Managers. Go ahead, please.
Hello, am I audible?
Yes.
Thank you so much, sir, for the opportunity. Sir, I have 2 questions. My first one is, the gross margins have meaningfully improved on a Q1 to a YY basis.
Your voice is not clear. Or voice is not clear.
Am I audible now?
Yes.
So, sir, my first question is, the gross margins have meaningfully improved on a Q-on-Q and on a Y-on-Y basis. It's touching around 45%. But the split between the customer and the industrial hasn't meaningfully changed. So just wanted your views on what led to this improvement and what is the sort of sustainable gross margins that one should work with going ahead.
There were two factors. Number one was the product mix, which helped us to improve the product margin. And number two, in this quarter, we have a better contribution came from the Pakhajan unit. That has also helped us improve the margin. So we hope that we should be able to maintain this margin going forward. We are not, we cannot say that confidently. As you know, the chemical sectors are at the moment under the price pressure, and that is purely the time will say that whether we will be able to hold, we can improve further on these, or we will not definitely deteriorate from here. So that's why we are giving a guidance of 17 to 19%. We are not saying we will be able to do that because currently a lot of changes are happening in the market, and one should be a little bit cautious in its approach and the commitment.
So, but the current EBITDA margins that we delivered in this quarter, it seems that it was majorly led by the gross margin improvement. So, going ahead, if we are not sure of the 45% gross margin, then shouldn't the EBITDA margins be lower in the quarters to come?
I did not say that we'll grow at 19%. I said between 17 to 19. So we are cautious here. I'll be happy to cross 19% also, but the market circumstances should support us here. So we have to wait and watch.
Okay. Very well, sir. So my second question is, so management has given a expectation of 60% capacity utilization in Pakhajan in Q4. So since we are very near to Q4, it's just 4 months away. So sir, what probability would you assign to this capacity utilization number?
Very high probability.
Okay. Understood. And so, when I look at a balance sheet very closely, the inventories have sort of doubled in September as compared to March 2024. So, does this inventory sort of indicate that we have received confirmed orders for the Q4?
Indicates two things. Number one, that we need to produce some continuous production at the Pakhajan to give trial material to various customers, and in lieu, and also the confirmation commitment what we are expecting from customers. Considering that factor, we have increased our inventory level of raw material as well as the finished goods at Pakhajan.
Okay. Okay. Oh, so these are my questions. I'll get back in the queue. Thank you and best of luck.
Thank you. We have next question from the line of Nigel from Leo Capital. Go ahead, please.
Good afternoon, sir. A few questions from my end. Firstly, what sort of market size is there for the products that we are making on the lubricant additive side, and what rate is the market growing at?
I think we discussed in the past calls also, lubricant market size should be in the $10 to $12 billion, and the market growth is between 3 to 4%.
Okay, $10 billion and 3 to 4% growth rate, right?
Yes.
Okay. My next question is on the same lubricant additive side. How much is our manufacturing cost advantage versus our competitors in USA and Europe?
I have no idea. I cannot comment on that, on someone's competitiveness.
Okay, understood, sir. And how many customers do we have on the lubricant additive side, and what sort of customer concentration is there? Will this also largely be an export business, or is it that the domestic will be large?
It's a both. It's a mixture of both the things. You are seeing that we are able to maintain our export share and the domestic share almost consistently with a plus minus 1%. So we are growing equally in a domestic market also as well as in the export market. And we have a wide customer base, for our entire product range. We have more than 2,000 customers today business. So I won't say we have been highly concentrated in one place.
Okay, sir, could you quantify approximately for the customer concentration at present, if possible?
I said about more than 2,000 customers we have today. I don't have exact split on the my category wise that how much in industrial, how much in industrial. I don't have that at the moment. If you need, just send an email and we'll try to get you some information, whatever we can provide you.
Sure, sir. Thank you. That's it from my end.
Thank you.
Thank you. We have a question from the line of Gautam Rajesh from Non-Bridge Capital. Go ahead, please.
Hi, good evening. Thank you for the opportunity. So I have two questions. My first question is, how much incremental capex would be needed to add capacity on the lubricant side, and when the new capacity, when will the new capacity come up, sir?
How much we need, we can't say that today, because how much we want to grow, how much additional we want to put, everything depends on that. So I cannot say that. Number two, we generally look at the next capacity increase. Once we achieve a 70% plus utilization, then we start working on ramping up the capacity. This time we are seeing a 1 quarter delay, so I don't think we will be looking very soon, but maybe after 6 months we can look at it once we come close to the 70% utilization of our any kind of an assets.
Okay, sir. And how many days of net working capital is there in the lubricant additive business, sir?
I don't have that split up for, we have company-wide split. We don't have anything for a particular segment.
Could you give any rough estimation, sir?
No, I don't. Sorry, I cannot provide you a rough estimate, because if I don't have data, how can I give those some rough estimate?
Understood. Those were my two questions, sir. Thank you.
Thank you.
Thank you very much. We have a question from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good evening and thank you for the opportunity. So sir, our Pakhajan utilization for this quarter is 15%. So was it in line what we have earlier in envisaged, and going forward, what should be the utilization in third quarter?
I think for quarter two, we have anticipated only 20% utilization in past. There are some delay is happening on an approval side from the customer, final approval. Okay, so that's the reason we have lowered down our utilization target.
Yeah, and for the third quarter, what would be the guidance?
It should be anything between 35 to 40%.
Okay, and do we still hold the 90% utilization for FY26?
Yes.
Okay, understood. And with respect to our next phase of capex, so what could be the cost of capex for similar capacity that we have currently at Pakhajan?
Yeah, I don't think if we have to have similar facility, then could be about 200-250 crore for the similar facility. But we don't know what we are going to, which direction we are going to expand, what product line we are going to expand. So I cannot answer that question today. But if you ask me the existing doubling of the capacity, what we spend is about 200 crore.
Okay, understood. And one last question. You gave a comment that the end market is slowing down. So can you highlight which end market of ours is slowing down?
I think what we saw that the people are cautious in Europe and USA for our overall industrial segment. Little slowdown we see. We also purely slow. I won't use the word slowdown, but there is a lot of competition and the price dropping, so the customers are cautious. Why to commit when the next buying will be cheaper for us? So that's what we see. People want to take advantage of the dip, and that's a normal way how people work. So we to mitigate that, we work on a long-term contract where we have the price commitment, the volume commitment for a quarter or 6 months, and that is helping us to just come out the issues.
Okay, understood. Thank you and wish you all the best.
Thank you.
Thank you. Participants, to ask a question, you may please press star and one. We have a question from Saurav Gupta from Maximal Capital. Please go ahead.
Yeah. Hi, sir. Sir, this 90% utilization for Pakhajan is for the entire year of FY26, or is it the exit sort of a FY26 guidance?
FY26 entire.
Okay. Okay. So now that, like maybe by first half of FY26, you would already be close to that, and you are saying that you would look into next capacity build up after reaching there. So maybe at the end of quarter one of FY26 or somewhere in quarter two of FY26, we will get to know about the further expansion plans.
I think so. Yes, you are right.
Okay. Okay. And sir, you had also mentioned that in your end markets, the prices are coming down. So how are we safeguarding ourselves? Because is the raw material prices that we use are also falling in tandem, thereby helping us to maintain the spreads? Or how will we safeguard our margins or the spreads at the gross level?
See, we do it by two ways. Number one, at the moment, what we saw that the raw material prices has dropped and has been kind of bit settling down. But what we also seeing in conjunction, the freight cost is also coming down, which has gone up before the 6 months. And when the freight costs come down, the freight become reasonable and your price comes down. While against that, we have a large portfolio of product. Somewhere we could be able to get a better margin in a certain product, or some of the product we have some good hold on quality and the limited supply chain. So that is helping us. So that was a result of a Q2 where we could have a good product mix reshuffling, which is help us to improvise the margin. Even though we have grown by volume by 17%, top line did not increase. If you look at the quarter to quarter, we did not increase even top line, even though there was a growth in our quarter on quarter basis. But we could improvise the margin, and that shows our ability to sustain it.
And in general, I'm talking about the gross profit margin, so they have been very volatile in this quarter. For example, it is up 1100 basis points compared to last quarter. So it is entirely driven by product mix, I understand, but what can be the stable sort of gross profit margin that we should pencil in for your company as a whole?
I think we will be striving for in the range of about 40%. That was our historically is the 38 to 40% gross margin, and that's what we like to strive there, and then improve further from there.
No, but the mix is now changing in favor of Pakhajan. So even after that, we are looking at
changing Pakhajan. It's in the Yasho level.
Sorry, sir, I did not get you.
We did not comment that the mix changed because of Pakhajan. Mix changed at across the Yasho level, Yasho plants.
Okay, so now with the new capacity in Pakhajan, we should be penciling in 38 to 40%.
Yeah, we will see that has to be the minimum level. We'll try to improve further on that.
Okay, so basically when you say your EBITDA margin should be at least 17% going forward, maybe the gross profit margins will decline, but you will have much better absorption of your fixed cost, which will help you maintain your similar sort of EBITDA margin at least.
Yes, as the Pakhajan ramp up the facility, the fixed costs will be started covering up here. Also, the expenses will be started taking care. The more we sell from there, the more there will be rationalization, and that will improve our overall margins.
Okay, okay. Okay, thank you, sir. Thank you.
Thank you.
Thank you. We have a question from the line of Manish Gupta from Solidarity Investment Management. Please go ahead.
Parag bhai, could you give some color on what's happening with your competitors right now? One reads a lot about a lot of chemical plants closing down in Europe. Anything you can share specific to our business and our products?
We have not come across, Manish bhai, any chemical plant of our company shutting down in Europe. We have not seen that. We know some one or two people had some issues on a certain site, but that could be temporary. They will be bounced back, pretty sure, or they will find an alternate. So cannot comment on that unless until we have a firm news on that part of it. I can say that. Because I have not come across any of our competitors shutting down of the product line in which we are existing.
Thank you, sir. I suppose the line for the participant got disconnected. We will proceed with the next question from Lavina Jagwani from Sparks Capital. Go ahead, please.
Yeah, hello. Sir, I see that for the first half of this year, you've done revenues of close to 340 crores. I just wanted to ask, what's your outlook for the second half, and how confident are you on achieving the target of 900 crores of revenue this year?
I don't think so. We will be able to touch the 900 crore purely because of the selling price dropping. We are very confident to have the total volume expansion, or the volume what we are foreseen that we will be able to sell, but the top line will be going to be challenging time, because despite increasing the volume growth, there is no top line growth. Purely the raw material price is down, and so the selling prices are down.
Okay, so what will be the target for this year, sir?
I think we will be able to give you that target somewhere in a January call only, purely because we see somewhere some sparks, but sparks are not living for the long time. It's just come and go. So we need to wait and watch. We are being cautious, as I said in my call, that we want to be cautious and we don't want to be overcommitting something in this current market.
Okay. And for FY26 revenue target?
I think we will still hold that, what we have committed of about 1250 crore FY26. That was already on the lower band side, so we don't see that challenge.
Okay, thank you, sir. That'll be all.
Thank you.
Thank you very much. Participants, if you wish to ask a question, you may press star and 1 now. We have a question from Shubhav Jhawar from Dexter Capital. Go ahead, please.
Yeah. Hi, am I audible?
Yes.
Yeah, hi, sir. So basically, I just want to revisit the question one of the participants had asked earlier. So our gross margins have expanded to 47% this quarter compared to 35% last year, same quarter, right? And when I see the investor presentation, the product mix is also similar between the two quarters. So basically, this quarter, the product mix is 82% for industrial, right? So product mix hasn't materially changed. So what is the exact reason here? Like, why is the gross margin so high?
Good question, good observation. Okay, within that product segment, we have a number of products. Okay, in industrial segment, we must be having a product more than 100 products somewhere. So yes, within that 100 product, rejig can help us to improvise this margin profile. We are trying to push those margin product also, and also to our conventional product side by side, to see that how we can maintain this growth and momentum here. But yes, what you say is correct. It's a part of the big portfolio of our industrial segment. That's not big change in the segment wise, but within the segment, what you see has a change and which is impacted.
So basically, you are saying the mix between industrial, which are higher margin, has been sold more this quarter, right?
Yes.
Okay. So my second question is, so basically, as I rightly understand from your answer in one of the previous questions, that the increase in inventory this year is due to the increased contribution from our trial that we have to give to our clients for the Pakhajan facility, right? But
Yes.
that has now led to our working capital increase, like to almost the cash conversion has increased to around 200 days compared to 100 days in FY24, right? So what would be our guidance for the working capital days going forward? Like what days is it to remain?
It will come back to 110, 115 by March.
By March of this year, right? Okay. So another question was that in the previous calls you had mentioned that we would like to keep our debt to EBITDA in the range of 2 to 2.5 or at max 3 times EBITDA, right? But as of now, it is 5 times EBITDA. So by when are we targeting to reach back to 2.5 times EBITDA?
That's not in my, I don't have crystal ball, but we'll definitely work towards that aggressively. We were expecting to come close to 3 by FY26. And if still the days things change, I think we should be there.
Understood. Okay. So my last question would be, you mentioned that we are seeing some downward trend in the prices, right? But if I look at the investor presentation, there it is mentioned that our volumes had increased by 18% YOY. Is that correct?
Yes.
And our revenues are also in line, like it is more or less, the revenues have also increased by the same number, 16% YOY, right? So that means in this quarter, we did not have any impact from the downward trend in prices. Is that understanding correct?
No, that's wrong. That's why the product mix played a big role there. Some of the products where we could get the better margins, better top line.
Understood. Okay. So basically that industrial thing has played out here as well is what you are saying.
Yes.
And okay. And how much would be the downward trend in prices impact us going forward, let's say in Q3 and Q4 of this year?
I also said before a few minutes that we see that the lower end, the price stability happening now.
Okay.
We do see somewhere some spark of price going up, but then again spark goes up and price coming down. So there is some volatility at the lower band, but I think what we believe that in a chemical pricing, this is at the bottom side. The below this, we don't see the price to fall unless something dramatically happen globally.
Okay. And so what was Pakhajan's share of revenue this quarter? As in, what is the revenue number from Pakhajan facility this quarter?
I don't have that number, my dear friend.
Understood. Okay. Thank you so much, sir. This was all from my end.
Thank you.
Thank you. We have a question from the line of Pradeep Rawat from Yogya Capital. Go ahead, please.
Yeah. So, sir, you earlier alluded our debt to EBITDA for FY26 would be around 3x. So, is there any consideration for an equity raise for next phase of capex?
Well, we will take a appropriate call when we decide to go for the next capex. Anything is too premature to speak at this moment, as the next capex round is not on the table as of now, unless until we achieve 70%. And looking at the current scenario, we are only expecting to achieve that by the Q1 of FY26. So we will take at that time appropriately how we want to do that capex, either through raising equity or whatever it is. But it will be too premature for me to comment.
Yeah, understood. And for Pakhajan facility, what would be the EBITDA impact from the fixed cost for this quarter?
Well, we don't do plant-wise. We do the company-wise our working on margins, and that is definitely Pakhajan has contributed because it started producing more and selling more product. So it will be having a positive impact on our gross margins.
Okay, understood. And can you elaborate on the pricing impact for this quarter? What was the pricing degrowth?
At least 10 to 15%.
10 to 15%?
Yes.
Okay. Thank you.
Thank you.
Thank you very much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. We have a question from Mr. Aman from Blue Sky Capital. Go ahead, please.
Yes, sir. Since around 60% of our revenue comes from exports, and first question is mine, how much of revenue comes from USA, and we have already seen a shift in government over there, and Trump has been very clear in tariff increase across all, specifically in China. So what kind of opportunities or threat you see due to that shift for our company or our industry?
In fact, we are waiting for this information that how that they are going to take a policy decision. That government that they are going to favor India or they are going to punish somebody. We don't know yet anything. So that's I will not like to comment on that, but I can say that the USA has a sizable proportion in our export. If you look at the pie chart of export, USA and Europe both combined together is about more than 70% revenue come from this two segment. And we are very much optimistic and on that the major growth will come from the matured market. Even though it's grown by 2%, 1%, for us the 2% of is a very big growth in the matured market than the when we talk about a 6% growth, 7% growth in India. It's quite sizable, and we believe that will be continued. Whatever the indication we have from our customers are quite positive on that side.
Sir, in his previous term, we already had a shot up in our revenue also. So what was at that time our understanding in his previous term?
What was it? I didn't get your question.
No, in Trump's previous term, it was clearly beneficial for us. Is that understanding right, sir?
Yes.
Okay, got it. That's it from my side. Thank you.
Thank you.
Thank you. We have a question from Darshil Shah from VT Capital. Go ahead, please.
Hi, sir. Thank you for taking my question. My first question would be, could you provide insights into which segment within the industrial chemicals division contributed the most to the volume growth during the recent quarter? And additionally, what are your projections and guidance for volume growth in this segment for the remainder of FY25, considering the current market dynamics and the demand trends?
We don't give that split what the segment is driving, but what we see that the industrial will be the driving force for the Yasho, and we foresee that the volume major growth will come from the industrial chemical volume for us in this segment. I can say that we are seeing has to be a growth by about 30-40% in volume growth to achieve our sales target what we have in our mind. And we have seen some delay in that happening purely because of some of the approvals are taking a little longer time. But now with some indication, yes, we are confident that we should be able to achieve a 60% utilization by end of FY25.
Okay. Another follow-up would be, what is the current status of customer approvals for the new plant? And additionally, could you also outline the expected timeline for finalizing these approvals, including any potential challenges that you foresee in this process going forward?
No, we don't see a potential challenges. There are a lot of approvals. Sometimes, there is a big shift customers to take in at their end. And we see that in that they are taking a little longer time to go ahead. And when we are making a major decision to move away from your existing supply chain, it takes time, we understand. And certain places also, the customers are waiting for their final customer approval. So it's not only the customer approval, but they need to wait and get approval from their customer, the change of source. So those dual things are hampering, and the kind of information what we have, we should be started rolling out our product from end of this month or early next month, and things should be in control within the next few weeks or months.
Okay. Thank you for the detailed answer.
Thank you.
Thank you very much. We have a question from Utkarsh Somia, individual investor. Please go ahead, sir.
Hi, can you please tell us what your sustainable tax rate will be and any plan for debt repayment in the next 2 years?
Well, we have to start repaying debt from April 25. We need to start repaying our debt. So we are going to repay debt of about 25-30 crores in FY26. then FY27, a year on year, we have to start repaying our debt. So it's in a system, and we are going to repay that.
So out of around 580 crore debt that you hold, you'll approximately pay 20 to 30 crores per annum. Is that right?
Well, after 580, only the 330 is a long-term debt. Rest is a working capital, my dear friend. So working capital you don't repay. Basically, long-term debts will be start repaying.
Okay. And the sustainable tax rate going forward?
It's same 25.4.
So this quarter it was less, -26. Okay.
Because earlier quarter we had made loss. So if you look at the H1 number, it will be 25.4.
Okay. And one last question. So the capex for phase 1 you did was 600 crores, of which 400 crores was utilities. So if you decide to expand equivalent capacity expansion, then you'll be spending only 200 crores going forward in case you decide to expand?
Yeah, plus minus.
Plus minus. So your ROC on incremental capex will be very high.
Obviously, because we have said that we have bought a much larger land. We have done a basic infrastructure creation which should take care of the future needs. Our effluent treatment plant and other things has to be in line with that. Otherwise the JPCB will not give us the full permission. So the money spent is on an entire infrastructure. We have created our admin block, the utility, warehousing, everything to take care of the future need. So right now what we need is only additional machineries and maybe a small building, nothing beyond that.
Perfect. Thank you so much and good luck.
Thank you.
Thank you very much. We have next question from Sakshi Trivedi from Vijay Associates. Go ahead, please.
Hi, thank you for the opportunity. I have a question regarding your US subsidiary as a distribution hub. What advantages does it provide for reaching American retail customers? And what product lines are you prioritizing for this market?
Well, the smaller customer over there and even some of the large customers are not comfortable to wait to plan 90 days or 120 days in advance. And if you want to reach out to the end user directly and to make a little more money, we need to have a stock there. And that's what we have learned from our European subsidiary, where we could able to reach out to more customers, and even we are growing with them today purely because we have a stock in place in Rotterdam. So the same concept has been applied to the USA, and we are expecting to start the commercial transaction from early January or somewhere in January 25.
Right, sir. Just another follow-up question. Can you provide more detail about the regions or markets driving the robust export demand? And are there any specific customer segments or product lines that are performing particularly well?
Well, we are growing very well into our industrial segment. That is doing remarkably well for us. And we believe that segment will take company through for next 3 to 5 years growth plan, what we have in our place. So that segment per se is helping us to grow the market share to reach out to the larger customer base.
Right, sir. One last question, sir. Are there any emerging or potential markets that you are considering for future expansion?
Yes, we do work with a lot of other countries like Central America, Latin America. That part of the world we are trying to expand our reach.
Okay, sir. Thank you so much.
Thank you.
Thank you very much. As there are no further questions from participants, I now hand the conference over to management for closing comments.
Thank you all. I would like to thank all our investors for their confidence in our organization, and we remain committed to create long-term wealth for our shareholders. Thank you. Have a good day.
On behalf of Yasho Industries Limited, that concludes this conference call. Thank you for joining us. You may now disconnect your lines.